South Florida's housing market is collapsing with home prices dropping by $40,000 to $75,000. And here's why it's worse than you think. It's not just a dip, it's a full-blown crisis. Insurance costs have skyrocketed, making homeownership unaffordable for thousands. Add in rising interest rates and suddenly that dream home is slipping out of reach. But the real kicker? Climate change. Flood risks are scaring off buyers and insurers are pulling out of the state entirely. This isn't a temporary slump. It's a warning sign of a much bigger problem. And if you think it's bad now, just wait. The ripple effects are about to hit the entire economy. It feels like everything's getting more expensive these days, but one thing that's really hitting homeowners hard is the cost of insurance. Premiums are skyrocketing, and it's not just a little bump. We're talking about some folks seeing their rates double or even triple in just a few years. So, what's going on? Well, a big part of it is climate change. More hurricanes, wildfires, and severe storms mean more claims, and insurance companies are passing those costs right back to us. Then there's inflation. Labor and materials to repair homes are pricier than ever, so when something does go wrong, it costs more to fix. And let's not forget the housing market itself. As home values rise, so does the cost to insure them. For homeowners, this isn't just an annoyance. It's a real financial strain. Some are dropping coverage altogether, which is risky, or they're raising their deductibles to keep premiums down. Others are even moving to states with lower insurance costs. It's a tough spot to be in, but until things stabilize, it's a reality a lot of us are dealing with. The numbers don't lie, folks. Let's talk about what's happening in the housing market right now. Picture this. Home prices are dropping month after month, like a stone sinking in water. That might sound like good news if you're looking to buy, but here's the catch. Mortgage payments are climbing higher and higher. It's a strange time. You'd think lower prices would mean more affordable homes, but with interest rates where they are, the math just doesn't add up. A house that cost $400,000 last year might be down to $350,000 now, but the monthly payment? It's gone up by hundreds of dollars. That's the reality for a lot of buyers out there. So what's the takeaway? Prices are falling, but affordability isn't improving. It's a tough pill to swallow, especially if you've been saving for years dreaming of that perfect home. The market's shifting, and it's not making things easier for anyone. So let's talk about what happens when a whole lot of people decide to move at once. Picture this. A wave of families packing up, heading to new cities, chasing jobs or better schools or just a change of scenery. It's not just a few folks, it's thousands, sometimes tens of thousands, all at the same time. And when that happens, the housing market, it goes a little nuts. First, prices shoot up. Suddenly, there's way more demand than supply. Landlords raise rents because they know someone will pay it. Homeowners list their places for way more than they used to. And buyers? Well, they're scrambling, bidding over asking price just to get a foot in the door. It's a seller's dream and a buyer's nightmare. But it's not just about the money. Neighborhoods change fast. New schools pop up, roads get busier, and suddenly, that quiet little town you loved is bustling. Or maybe overcrowded. Some people love the energy, the new restaurants, the fresh faces. Others, they miss the way things were. And then there's the flip side. The places people are leaving, those markets take a hit. Homes sit empty, prices drop, and local businesses struggle when their customers vanish. It's a ripple effect. One big move can shake up entire regions. So yeah, mass migration, it's not just about people changing addresses. It's about money, culture, and the way communities grow or sometimes fade away. So here's the thing. Those new flood maps just dropped. And let me tell you, they're shaking things up. What used to be a safe zone is now looking a lot riskier. Homes that were once considered low or moderate risk. Yeah, a bunch of them just got slapped with that high-risk label. And that's not just some bureaucratic paperwork. It means higher insurance premiums, stricter building codes, and maybe even a hit to property values. Now, I know what you're thinking. How did this happen? Well, the maps aren't just guesses. They're based on better data, more accurate models, and let's be real, a changing climate. Rainfall patterns are shifting, storms are getting nastier, and those old maps, they just weren't cutting it anymore. But here's the kicker. If your home's now in that high-risk zone, you're gonna want to act fast. Check your insurance, look into mitigation options, and maybe even chat with your neighbors. Because this isn't just about one house. It's about whole communities having to rethink what safe really means. So here's the deal with the new reserve laws for condo owners. Basically, the state's cracking down to make sure condo associations have enough money set aside for big repairs. Think roofs, plumbing, that kind of thing. No more kicking the can down the road and hoping for the best. Now, every few years, your condo association has to get a reserve study done. This isn't just some back-of-the-napkin guess. It's a full assessment by a pro who looks at everything that might need fixing or replacing in the next 30 years. They'll tell you how much it's going to cost and when it's going to happen. And here's the kicker. The association has to actually fund those reserves. No more skimping and leaving owners on the hook when something major breaks. The law says you've got to have a plan to cover those costs, whether that means raising fees or setting aside a chunk of the budget every year. For owners, this means a couple of things. First, you might see your monthly fees go up, but that's because the association is finally doing what it should have been doing all along, saving for a rainy day. Second, you'll get more transparency. The association has to share the reserve study and the funding plan with everyone, so you'll know exactly where your money's going. Bottom line, it's about protecting your investment. Nobody wants to get hit with a surprise $20,000 assessment because the building's foundation is crumbling. These laws are here to make sure that doesn't happen. So yeah, it might cost a little more now, but it's better than getting blindsided later. The latest numbers are in, and they paint a clear picture. Inventory levels have surged by nearly 12% over the past quarter, a jump that's caught a lot of folks off guard. Warehouses are packed, shelves are full, but here's the kicker. Demand isn't keeping up. Meanwhile, investors are getting nervous. We've seen a steady pullback, with capital flight hitting its highest rate in 2 years. It's like everyone's waiting to see which way the wind blows, but no one's making a move. The question now is whether this is just a temporary hiccup or the start of something bigger. Either way, the market's holding its breath. All right, let's tackle this step by step. The first thing we need to do is identify the root cause of the issue. From what I have seen, the problem seems to stem from a mismatch between the data input and the processing module. So here's what I'm thinking. We adjust the input parameters to better align with the module's requirements. That way, we're not overhauling the entire system, just making a small tweak that could have a big impact. It's a low-risk change, and if it works, we save ourselves a lot of time and effort. What do you think? Should we give this a try first before diving into more complex solutions? All right, let's talk about the second way you could tweak this. Instead of just cutting out the fluff, you could try restructuring the whole thing to make it flow better. Think of it like rearranging furniture in a room. Sometimes just moving things around makes everything fit better. For example, say you've got a paragraph that starts with a bunch of background info before getting to the main point. You could flip it. Start with the key idea, then fill in the details after. Like, instead of saying, back in 2010 when social media was just taking off, a study found that people spent an average of 2 hours a day scrolling. You could say people spend way more time on social media now than they did a decade ago. Back in 2010, a study found the average was just 2 hours a day. See how that keeps the listener hooked right away? Another trick is to break up long sentences. If you've got a run-on that's making people lose track, split it into 2 or 3 shorter ones. Like, instead of, the team worked late into the night trying to fix the bug that had been causing the system to crash, but no matter what they did, it kept happening. You could say, the team worked late into the night trying to fix the bug. It kept crashing the system no matter what they did. It's cleaner and easier to follow. You could also try swapping out weak words for stronger ones. Instead of saying, the results were pretty good, you could say, the results were impressive. It's a small change, but it makes a big difference in how it lands. The point is, sometimes the issue isn't just what's there, it's how it's put together. A little rearranging can make all the difference. All right, let's talk about the third potential edit. This one's all about tightening up the pacing. See, sometimes a story can feel a little sluggish, like it's taking too long to get where it's going, so what we do is trim the fat. Cut out any scenes or lines that don't push the plot forward or deepen the characters. It's not about losing the heart of the story. It's about making sure every word earns its place. Now, the key takeaways here? First, pacing isn't just about speed, it's about rhythm. You want moments to breathe, but you don't want the audience checking their watches. Second, every scene should have a purpose. If it's not revealing something new or moving the story along, it might need to go. And third, sometimes less really is more. A tighter script can make the emotional beats hit harder because there's no fluff getting in the way. So if you're feeling like your story's dragging, try this edit. Cut what's not essential and see how much stronger the rest becomes. The housing crisis isn't just a headline. It's a daily struggle for millions. Families are being priced out of their neighborhoods, renters are facing impossible choices between food and shelter, and entire communities are feeling the strain. The lack of affordable housing isn't just an economic issue, it's a human one. People are being pushed to the brink, and without action, the problem will only get worse. We've seen the numbers: skyrocketing rents, stagnant wages, and a shortage of homes that's only growing. But behind those numbers are real people. Parents working multiple jobs just to keep a roof over their kids' heads, seniors forced to choose between medication and rent, and young adults giving up on the dream of ever owning a home. This isn't just about bricks and mortar, it's about stability, dignity, and the future of our communities. The longer we wait, the harder it becomes to fix. We need solutions now, policies that protect tenants, incentives to build more affordable housing, and real investment in the places that need it most. The time to act is running out. Every day without progress means more families at risk, more neighborhoods hollowed out, and more people left behind. We can't afford to wait. The housing crisis demands our attention, our resources, and our urgency, because the cost of inaction is too high,